All right, let us dive into the financial world's darkest corners and talk about the 5 black swans that could rock the global system. These aren't your everyday market jitters. These are the low probability, high impact events that keep economists up at night. First up, the shadow banking time bomb. Think hedge funds, private credit, and other non-bank lenders. They're leveraged to the hilt. If one of them starts to wobble, it could trigger a domino effect of margin calls and forced selling, spreading panic way faster than you can say contagion. The IMF has already sounded the alarm, pointing out how traditional banks are increasingly exposed to these alternative credit risks. We need to watch for funds suddenly freezing redemptions or credit spreads blowing out. It's a sign the deleveraging cascade has begun. Second, imagine the world's most important market. The foreign exchange market just freezes. The US dollar is at the heart of everything. And if liquidity in the massive $96 trillion FX market suddenly evaporates, global trade and finance could grind to a halt. Companies wouldn't be able to settle payments, and collateral chains would snap. Again, the IMF has warned about this vulnerability. The key indicators to watch are sudden spikes in cross-currency basis swaps, and dealers dramatically widening their bid-ask spreads. That means the plumbing is getting clogged. Third on our list is sovereign debt stress. For years, government bonds have been the safest asset you can own, the bedrock of the entire financial system. But with interest rates soaring, what happens if that bedrock starts to crack? We're talking about major economies struggling to sell their own debt. The Bank of England and the European Central Bank have already flagged the risks of failed bond auctions or sudden credit downgrades. If you see the MOVE index, which tracks bond market volatility, start to surge, or if a country's credit default swaps jump, it's a major red flag. Fourth, let's head over to Japan. For decades, the Bank of Japan has kept interest rates near zero, making the Japanese yen the go-to currency. For carry trades, investors borrow cheap yen to buy higher-yielding assets elsewhere. But what if that changes? We're already seeing massive volatility in Japanese government bonds, or JGBs. Benchmark yields just had their biggest annual rise in 30 years. If this market truly loses control, it could force a massive, chaotic unwinding of those global carry trades, hitting the yen, the dollar, and stock markets all at once. Watch for sharp yen movements and a sudden, synchronized spike in global equity volatility. Finally, we have stress right in the heart of the U.S. financial system, short-term funding markets. This is the critical plumbing that lets banks and money market funds lend to each other overnight. If the system runs short on reserves, these crucial repo rates could spike unexpectedly, causing a credit crunch. The Fed itself has noted that bank reserves are now just ample, not abundant, and they've already had to step in with T-bill purchases to maintain stability. So, we have to monitor rates like SOFR for any sudden spikes and watch for unusual flows in and out of money market funds. A problem here is a problem everywhere. So there you have it, 5 potential black swans that could seriously disrupt the global financial system. These aren't predictions, but they are the tail risks that smart investors and policymakers are watching very, very closely. Understanding them helps us all stay prepared for whatever the market throws at us. Thanks so much for watching. If you found this breakdown helpful, make sure to hit that like button and subscribe for more deep dives into the world of finance. See you in the next one.